Hi everyone, Kathleen here, Research Director at XTB. The markets are focused on politics this week. Firstly, the first round of the French election saw Marine Le Pen's far-right National Rally Party win the largest share of the vote. Secondly, President Trump's chances of winning the US presidential election in November have surged since Thursday's debate. And then there's the UK election on Thursday. The UK election has a very different flavour compared to the French and the US elections. Firstly, the Labour Party is still the likely winner of the UK election on Friday. It's considered a left-of-centre party, it's one of the main political parties, and it's expected that the transfer of power will be smooth. Under the most recent Conservative Prime Minister and Chancellor, the focus has been on financial stability and ensuring that public spending is managed and does not go out of control in the UK. Labour have pledged to carry on with this and have only announced minimal tax increases, and they've not made big spending pledges during their campaign. The result has been bond market stability for the UK and a decent performance for stocks and the pound in the lead up to Thursday's vote. This is in contrast to the French election, where the National Rally Party, who could potentially form the next French government if they win this Sunday's election, they've said that they would roll back some of President Macron's economic reforms. They would scrap most rates of VAT. In the UK, Keir Starmer wants to levy more VAT, for example, on private school fees. And they would lower the pension age. France already has a high budget deficit and a debt to GDP ratio of 110%. This is why the bond markets were spooked by the prospect of a national rally government. It's also what weighed on French stocks, including banks, with some French banks falling as much as 20% in June. Now, there are some concerns about the US election and that Trump could boost the US fiscal deficit, which is nearly 6% of US GDP. At the start of this week, the US 10-year Treasury yield surged 10 basis points as traders started to price in the prospect of a Trump victory. While this didn't impact the overall stock market, it is a sign that volatility could creep higher in the US as we move towards November. By comparison, the UK markets look calm and steady. There's no political risk premium priced into UK yields right now. UK 10-year sovereign bond yields have lagged behind French and US yields in recent days, which is another sign that there is far less of a political risk premium attached to the UK election than to elections elsewhere. However, if Labour does win as expected on Thursday, the focus will now be on how large the majority is. There will also be some added focus on certain sectors in the UK stock market, including utilities and water companies, which Labour have threatened to regulate more closely. They've also pledged to build more homes, so their home builders may get a boost. They may also closely watch the development of AI, and a Labour government could more closely regulate tech. While we doubt that this will have a massive impact on US tech giants' share prices, it's worth noting that Nvidia's share price wobbled slightly on Monday after French regulators said that they would investigate the company for anti-competitive prices. Apple's share price has also been impacted from regulatory battles with the EU. That's all for now. Watch out for our post-election update at the end of this week. Thanks for joining.